Welcome to today's Morning Report on Wednesday the 17th of August with me, Richard Berry, market analyst at Hantec Markets. We've got a mildly negative move actually on the European equity markets today. We started to see a little bit of profit taking coming through yesterday. The S&P 500 closing slightly lower. Asian markets were mixed overnight, but the sort of neutral to mildly positive open on European markets has just drifted lower again, and it's interesting because my chart today is the DAX, and I'll talk about how the fact I can see some corrective signals coming through now, certainly on the DAX, and that certainly seems to be coming through across the markets today. Now we've got a strong rebound on the dollar in the last sort of 12 hours or so, really, on the back of Fed meeting, on the back of FOMC member comments. Now, yesterday we had this sharp breakdown below 95.25 on the dollar index, trade-weighted dollar index. That was that's what I see as a bit of a pivot area. Sharp move below that. Now we're seeing this recovery, and that's coming after both Bill Dudley and Dennis Lockhart of the Fed suggested that rate hikes were still on the table for 2016 and perhaps even September from Bill Dudley. Now, Dudley is interesting because he's historically been one of the more dovish members of the committee, but it'll be very much as though that I think that the market is still going to be pushing ultimately, and the Fed both I think are going to be moving towards December being a rate hike month probably as things stand, but the markets are now recalibrating a little bit on the dollar and rebounding against all the forex majors today, and also gold and silver lower, and also the oil price mildly lower as well. Now the oil price has been pushing higher, and that push higher has now broken that downtrend. That is a similar downtrend to the one that was broken by the Brent crude price, but WTI has now broken that downtrend slightly lower today. But it'll be interesting to see what happens now, because there is a bit of a technical sort of crossroads that is trying to break through, and the rally is increasingly positive, but can it sustain the move? Dollar strength would not help that move, so a little bit of a rebound in the dollar is not helping that move today. But yes, it'll be interesting to see how this one all goes. Now, in terms of your economic data today, you've got a little bit of UK data. You had the inflation data yesterday for the UK picking up mildly. You've now got the average earnings data for the UK as well today, expected to improve slightly to 2.3% on an ex-bonus basis, but also you've got the unemployment rate 4.9. Now this is all the data for June, interestingly enough, according to Reuters, and it'll be something to monitor, whether to see that you're going to start to get traction to the upside. But this is the latest bit of data that sort of monitors how the UK is doing in a sort of post-Brexit scenario. Then you've got the EIA oil inventories report. Let me just show you that the chart of average weekly earnings for the UK, mildly picking up to 2.3% is the expectation, and also the unemployment rate 4.9%. But the EIA oil inventories, now we've had 3 weeks now of oil inventories build after sort of 2 months or so of drawdowns, and that those surprise inventories build had a negative impact on the oil price last week, but expected this week is a 1 million barrel crude oil stocks increase. Now the gasoline stocks are also interesting, and they've been having drawdowns in recent weeks, larger than expected a couple of weeks ago, not so large last week, but 1.7 is the expected drawdown, and that has got the ability, if that is a larger than expected drawdown, that could impact on the oil price as well. So watch both for crude stocks and gasoline stocks as well. They've been the two drivers in recent weeks. Other than that, you've got the Fed meeting minutes tonight. Now, the Fed meeting minutes for the July meeting was no press conference meeting, so adding more meat to the bones of the statement would be nice, and it'll be interesting to see whether what the Fed views on Brexit are, and also on the international economy, i.e. China. So that is that is going to be seen in the Fed meeting minutes tonight, and that'll be the main takeaway. But mildly, and I stress this again, mild hawkish lean in the Fed statement, away from the June statement. So it'll be interesting to see what the Fed minutes come out with today. Now, my chance today is the DAX, and we've had that's a bit early for that. You can see this. This is on the long-term chart. We've had this broken downtrend on the DAX, so the outlook for the long-term outlook is certainly improving, and it's sort of, as I zoom in here, you can see that it's broken through all this resistance overhead, and it's run higher, but it's starting to show a little bit of a corrective move. And yesterday we had a gap down at the open, filled the gap. Let me zoom in, you can see that filled that gap and closed below that gap. So that is a negative. That is a negative move on the gapping for the DAX, and also now we're starting to see the traction to the downside. Now you can see on the hourly chart that this is a minor top pattern, very small top pattern that's completed now in the last hour below 10.635, which if you measure from sort of 10.800, it gives you around about sort of 165, 170 ticks of downside potential. Now that actually puts you pretty much squarely bang on the breakout of 10.475 area. Now that is the old high. 10.474 was this old high from April, which we recently broke through. So that is an interesting correction back towards that, and that's also that downtrend that I was talking about earlier. That long-term downtrend is around that sort of level as well. So this would be considered to be a nice little medium-term correction within a bullish scenario, really. The near-term outlook is corrective. Yes, you've got the RSI dropping back from 70, that's corrective. Stochastics crossing negatively as well, not a confirmed sell signal yet, or profit taking I should say, but certainly these indicators are all sort of pointing towards a near-term corrective move, and I think to sort of have a drop back into the sort of resistance, the old resistance, which has now become new support of 10.372, which is the 50% fib level, and up to 474, which is that breakout level. So you've got a nice sort of 100 tick band of support there between sort of 10.370, 10.470 to contain a correction. I think that would be where you'd see a nice little buying opportunity. That would be also sort of back towards this 21-day moving average as well. So a near-term corrective move on the DAX is perfectly possible now, and it certainly looks as though it's sort of gathering a bit of momentum. You've seen a break lower, you've seen the 21-hour moving average as well, which had been the basis of support, broken lower, now become the base of resistance, so that is something to also watch. So you'd be looking out for near-term sort of rebounds to be sold into, I think, but don't forget this is a counter-trend move, I think, now. With the improvement in the outlook generally. So it does look as though there is a near-term correction on, but I think it will prove to be a buying opportunity ultimately. So I wish you good luck in your trading today, and I'll speak to you later.